Moderator, Robert Lavigne, Chief Economist of OMERS. Also, Pablo Breard, VP and Head of International Economics at Scotiabank. And via video conference, Otaviano Canuto, Executive Director for Brazil at World Bank. Thank you, gentlemen. Is that working? Can't tell.
Can you hear us?
I can.
Well, welcome, Otaviano. Okay. Well, good morning, everyone. Today thank you very much for organizing this session. It's a pleasure to be here. My name is Robert Lavigne. I'm Chief Economist at the OMERS pension plan, the Ontario pension plan. And I'll be the moderator today for a discussion on Brazil's economic and political outlook. I'd like to just start this off by perhaps giving our panelists the opportunity to tell us a little bit about themselves. We have a virtual panelist and we have a live panelist. So let's begin with Pablo, please.
Talking about oneself is the most boring thing, unless you're born in Argentina, right? But as I always say, I was born in Argentina and civilized in Canada. So I will then continue with those remarks. And a couple of disclaimers. I've been working for a great Canadian-based global financial institution, Scotiabank, for 23 years. But my main disclaimer is I'm not a banker. I was never intended to be a banker. I will never be a banker. But I work in that great institution. I'm responsible for the International Economics Unit. We monitor conditions globally in systemically relevant economies that affect in our operations internationally, and also coordinate the economic monitoring and political monitoring of the countries that are strategic for the bank. That's my role. So call it international economist. Nowadays, what is an international economist? Probably talking about politics and social and cultural issues, and we have experience over the last 12 months here. So then about me is again, as I said before, 23 years with the bank. I have a dual master's in economics and international relations. I've been monitoring emerging markets for, that will just probably tell a bit my age, close to 30 years now. And I travel quite extensively to the areas and the countries in which the bank has operations, but also we maintain an objective and independent view from the business units. We're trying just to understand the context in which the bank operates. That's a bit about myself. So.
Great. Well, thank you very much for that. Mr. Canuto, can you hear us?
Yes, I can. I hope you can. Can you guys see me?
Yeah, very well.
Yeah.
It doesn't matter. Speaking about myself, like Pablo, I never imagined that I would be a sort of banker, because I've been working at multilateral institutions, development institutions, for my last 14 years. Currently, I sit at the board of executive directors of the World Bank Group, representing Brazil and 9 other countries, Colombia, the Philippines, and many others. But I've been as well a vice president here at the World Bank. I have been in the past vice president at the Inter-American Development Bank. And I have also sat at the board of the IMF. Prior to that, I was the deputy for international affairs at the Ministry of Finance, and I had a previous academic career at the University of São Paulo and University of Campinas. And I'm very glad. Unfortunately, I couldn't make it physically because we have a board retreat here, and I wouldn't be able to travel. So thank you. Thank you for the opportunity.
Great, thank you very much. Just a bit about myself. I've been at OMERS for a very short period of time, been there for a year. I used to work at the Bank of Canada for 15 years, where I covered issues such as the G20 and the IMF. and most recently we did advanced country monitoring. So now I'm in a new life here in the private sector. I'm a chief economist at the OMERS pension plan, where we are beginning to spread our wings and consider more emerging market investments more seriously than we have in the past, and hence my presence here today. I thought to start off the conversation maybe with some short-term developments. We have Brazil sort of maybe at the ending a terribly acute recession, one of the worst in living memory. We had a compression of GDP about 7% over the last 3 years. Inflation has gone up for a variety of reasons, and fiscal deficit remains like a challenging 10% GDP or something of this nature. But we've had a shift in the president now, and we have the announcement of some really good policies going forward, and markets have taken that very well. And so over the past year, Brazil has been probably the best performing emerging market. It's a big rebound story. I would like your views on whether Brazil has turned a corner here, and what can we expect beyond the initial financial market exuberance? What can we expect in terms of the macro for the next year or so? Perhaps you'd like to start?
Yes, thank you. Well, first of all, if I can just probably connect some of your messages of the previous three speakers, and also just use the words of the consul when he said that we're living a new Brazil with a strong sense of reality. And that is very welcoming. And the strong sense of reality is not necessarily because it was a change in government. In fact, all of us over the last 14 months, beginning in this country, going to my country of birth, and until the November 8th vote, and we were very sensitive what's going to happen in December 4th in Italy. We have been bombarded with a series of electoral events of global systemic relevance. And the question that we have is it really, has Brazil been part of this? Clearly it was. And perhaps living in Canada, and I've lived here for 18 years now, it's incredible how we monitor global events in a different way. We're very US-centric at the time of analyzing global developments, right? So to us it's more important what happened on June the 23rd, perhaps because we have in our coins, the Queen, or we're more important about November 8th vote. But there were a series of votes of relevance, throughout the last probably 14 months that we need to highlight. I'm beginning with this country. This country is literally reflecting the demands of the new generation, the new society. And that's what expressed in the vote on October last year. The same applied in Brazil. The difference is that the presidential system has a bit of a rigidity in its own political framework, which you don't have that in a system like our parliamentary democracy like you have in the UK and Canada, which have decided to change their leader in a different way, October in Canada and June in 2016. At the time, a process of, in English word impeachment, or, juicio político in Spanish, was taking place in a very constitutional way and in a very orderly manner. But the endogenous root of that impeachment that led to a change in government generated in society itself, in people. Let's go back 3, 4, 5 years ago when the Brazilians were going to the streets in a very peaceful way. And I recall, there were like more than 3-4 million people on the streets in the most important cities of Brazil, highlighting, one word: regime change. Here in the Anglo world, we associate regime change to Cuba, or we associate regime change to Iraq. Let's not even mention Syria or Aleppo as we speak right now, because that's a situation of military stress as we speak. The Brazilian change is endogenous, started bottom up by society. It's like all of a sudden the illuminated political class of Brazil woke up one morning and said, I want to change the government. No, it's endogenous. That's why I believe that that's the beginning of the conversation. So the August 30th vote is one of the most important, probably, electoral outcomes of the year 2016. And that took place, in the Brazilian Senate, when the Brazilian Senate decided just to impeach the government, or the president, Dilma Rousseff, which it was literally mirroring an impeachment of the regime itself, that was led by the Partido dos Trabalhadores for a long time. So this is not a change in government. This is the beginning of a transition, of a change of a political regime. That is why we need to celebrate, generated, from Brazil itself. Markets, financial markets, you highlighted that very clearly, and I can give you the numbers. The Brazilian Stock Exchange Index, it's near all-time, the last 5-year highs. The Brazilian equity market is, the third largest equity market in the American continent, following the US and Canada in terms of market capitalization. The Brazilian real, yes, appreciated by 16% in my memory. I have my notes here, but I'm trying to memorize that, since January. But let's not forget, it collapsed close to 60% over the last 50 years. So if we just normalize the exchange rate of Brazil, the Brazilian real, we can say that it is down 43%, which puts Brazil in an outstanding competitive position at the time of the new administration transitioning to a new political regime. Okay? So the markets, as you highlighted, there were a lot of millionaires, today in Brazil or in the rest of the world who just invested in Brazilian bonds, in Brazilian equities, or in Brazilian currency. But at the same time, there is something that I would like to highlight. The financial market metrics are really, they're the only crystal ball of what's going to happen in the next few years. The credit worthiness of Brazil, has sharply deteriorated because Brazil is in the midst of a fiscal emergency. You mentioned that 10% of GDP, which target of fiscal deficit, that is a key priority. The vote yesterday of the Brazilian, Senate just to pass the first amendment to the fiscal reform, extremely positive. It's structural by definition. This is the time to study Brazil as a structural success story, not as an opportunity to make money, because they're just recovering. And as I said before, the Brazilian currency collapsed 60%. The fact that they recovered 16 means that they have crashed 43%. So the unveiled plan of infrastructure is an outstanding opportunity for the rest of the world. All the major engineering companies in the world have Brazil on the radar screen now. Pension funds in Canada or abroad, financial sponsors around the world, sovereign wealth funds, major engineering companies in Spain, in Europe, they're all right now in Brazil. So I think Brazil is a real sector story. It will be the Brazilian way, very gradual, but they have turned the direction. Brazil is a story for the next decade. 2016 and 17 are transition years, and then you have elections again, right? So again, this is an administration which we could say in transition. So the numbers are very discouraging or encouraging, depending how you take a look. An employment rate that is 12%, it's not sustainable. 12% right now as we speak. A fiscal deficit of 9% of GDP, it's not also sustainable. So that's why the economic recovery will be gradual. The economy may grow at best 1% next year. They're going to announce data, in the next few days. The GDP probably would have contracted around 4.5% of the last 12 months. So the real, again, following that crash, will be in inflation-adjusted terms very stable. So Brazil will not be like Mexico, the story of exchange rate volatility and distress in the next year or so. So, and also Brazil is back in the global debt markets. This is very important. Brazil, Mexico, and Argentina, the single largest countries in the developing Americas, are also the highest indebted countries in the developing Americas. Over the last 5 years, courtesy of the Petista regime in Brazil and Kirchnerista regime in Argentina, Brazil and Argentina were out of the market. Now they're back. So this is good. This is a time in which Europe is in distress, Middle East on fire, the Americas the markets are telling me, it's not necessarily an economic view, are just probably being favored by capital. And this is an opportunity for the three largest economies to initiate a new trend. And this goes back to my last comment, leadership. Leadership is, we have seen a lot of change, not only because of the November 8th vote, we're just already bombarded and tired of listening to the person. But also Japan has almost majority in the Senate to do constitutional reform. You know, think about that. China is changing its political leadership this year. France is going to the most turbulent elections of its history in May. On December 4th, Italy will just change, you know, trying to modify the constitution to eliminate 2/3 of senators. Good luck, Italians, that will not happen. That will not happen, and most probably likely, if Matteo Renzi is mimicking what David Cameron, you know, said, he would resign. Is that good or bad for Europe? We all know that. And then ahead of, at the same time, votes in Austria, referendums in the Netherlands, and this very, very epic, important vote in May in France. All of that, we put all that together, it's so good to be on this side of the Atlantic. It's so good to be in Canada. It's so good to work for a bank or a pension fund, which together have become the financial sector strength of this very small, in terms of population, country called Canada. So we're there, we are eyeing foreign direct investment, and I'm not speaking on the behalf of Scotiabank, but rather as the financial sector as a whole. I think it's, and Brazil is on the radar screen back again. So I think I have a very, I would say, not cautiously optimistic, I would say optimistic view. This is structural change, this is not cyclical recovery only. Okay, so I'll leave it there.
Great, great. Well, thanks for that comprehensive answer. Mr. Canuto, what are your views on this?
Well, look, I like very much what Pablo said, and I agree with him. So let me try to add a bit, putting the more of the a kink on the economic side. I believe that the depth of the Brazilian ongoing economic contraction can only be understood if we take into account 4 different layers of explanatory factors. First, we watched, particularly after 2011, 2012, the exhaustion of a very virtuous, to some extent, economic growth pattern that characterized the country in the new millennium. One in which the average GDP growth was above 4%. One in which, in fact, the bottom of the pyramid of the income structure, the bottom grew, the income at almost Chinese rates, above 7%. So it was a big, really, if not a party, because a party implies a hangover, but a cycle that was bound to finish. And why is that? Because it wasn't based on productivity, on huge productivity increase. In fact, it was the result of a combination of first of all, the commitment to fiscal responsibility during the transition from Fernando Henrique Cardoso to Lula, which led to the Brazilian investment grade. It was also, it reflected, of course, the favorable external conditions in terms of commodity prices and liquidity, and then also reflected the transition from unemployment rates above 11% toward levels close to 5% in a range of 8 years. And this combined with formalization in the labor market and so on. So, but this exhausted because of the end of the super commodity cycle that came by waves, as we all recall. Initially, the maintenance of growth in China and other emerging markets give an overlife to the super commodity cycle, but ultimately it came down. And also the scope that there existed for simple shift in levels of employment and formalization also reached the limit. But this is not only is not enough to understand what happened to Brazil afterwards. There is a second layer of explanatory factors which stems from the mistaken economic policy response taken by the government. There was a misunderstanding from President Dilma Rousseff, but something that was already built in Lula's as he ran to the end of his second mandate, which was the idea that the answer to the growth slowdown was to do more of the same. And Dilma tried to find a shortcut to a new economic cycle, one that would be then based on investments, which would be reached through finance through public banks, combined with a huge program of tax exemptions, plus administration putting a lid on some regulated price. Since the exhaustion of growth was something stemming from structural reasons, the private sector did not lift investments, and the only outcome of Dilma Rousseff's attempt was fiscal deterioration. So that's a second layer that one should add to the to understand the crisis. In fact, I mentioned three because if one has to take into account the change of conditions outside. But then there is the fourth one that was quite well mentioned by Pablo, which is the political crisis, a parallel political crisis that came in tandem and aggravated the economic crisis, stemming from a perception from society and the desire for a change of regime. There are many controversy. There is a controversy about how to explain the street movements in 2013, but the fact is they probably reflected a strong desire from the population towards an improvement in the quality of public spending, and this morphed into a reaction to after discoveries of the rigging system, the corruption and the scandals that started with Petrobras, but then they were, let's say, extended and observed in each and almost every significant sector where there is an interface between the public and the private sectors. Now, the reason I'm referring to this is that it's undeniable that there are very strong medium to long-term gains deriving from this political crisis and from the corruption scandals, and I will refer to them in a minute. But what one cannot deny is that the immediate impact in the very short term has been in a deepening of the economic contraction, because after all, we're talking about companies, the invoice of which, the total invoice of the companies involved in scandals, the 12 companies, they round up to something close to 12% of Brazilian GDP. And then suddenly, 12% of Brazilian GDP was paralyzed, either because, administrative, organizational paralysis. After all, it's not every day that big companies have CEOs in jail. And also financial paralysis, because all the finance sources dried, and also collapse of demand. But the silver lining and the benefits that are to be accrued by Brazil, hopefully by other countries, other emerging markets that might follow suit, is threefold in my view. First of all, I think it's fair to say that the perception of rule of law in Brazil has changed dramatically, and hopefully it will keep improving. And that, of course, matters as a source of business risk, right? Also, one can anticipate a high degree of contestability, a high degree of competition in all those market structures operating in the sectors where there is an interface between the public and the private sector. And with more competition, one may expect more efficiency, more winners getting it because of appropriate investments and so on. And thirdly, of course, there will be less fall on the public sector side, on public sector budget, which means a better cost effectiveness of the public spending, the relationship between the public spending and results. Okay, so we need the four layers. Don't ask me here to weigh in, to say which one was quantitatively more important. I leave that to the political debate in Brazil. But the fact is that they came together. Is that what explains why Brazil is poised to decline by close to 7% the GDP in the last 2 years? And the per capita GDP this year, 2016, is likely to be a third lower, to be more than 10% smaller than it was in 2013. Now, underlying this, there are two major challenges that I like to frame as such, as it follows. Productivity increase has been anemic in Brazil, anemic, sorry for the pronunciation. And the fantastic virtuous cycle as far as poverty reduction and income concentration are concerned in the new millennium happened without major productivity increases. Now the country has to face this agenda, and I will have more to say regarding infrastructure in that regard. But also, such an anemic productivity increase process, movement, period, came in tandem with a legitimate political desire to tackle the legacy of exclusion and so on. And this led to an uplift of functions, of attributions established for the state, for the government, while not touching previously existing privilege. And this led to what I have been calling in my text a sort of a fiscal obesity of Brazil. So you have at the bottom or at the backdrop anemic productivity increase, which has evolved into a situation of fiscal obesity. This is important to have in mind because the reason why Pablo correctly was pointing out to the positive market reactions to what has been pursued by Temer government stems from the fact that they are facing the most immediate necessity, which is tackling the fiscal obesity. But this will be followed by policies tackling the other dimension of the crisis, which is the productivity increase. Now, rapidly on the fiscal obesity, I can tell you something. President Dilma herself had realized this picture. And that's why Joaquim Levy was brought in. That's why even after Joaquim Levy left, the following minister, I heard from him in January of this year, basically a proposal that he would be making in due time, very much reasonably along the lines of what is being implemented now, maybe in less drastic let's say degrees, but on the same direction. There was reasonably a consensus among well-informed economists about the need to do something about fiscal deterioration and something more structural, something pointing out to an enduring fiscal adjustment beyond simple annual fiscal adjustment. Problem is, of course, Dilma herself went on this by herself, and she didn't have the support of her political base. Whereas now, the government, the Temer government has their support. Now, as I said, and I don't think it's time to go into the details, but what the government has approved is about to finalize the process of approval by Congress. It has already gone through the lower house, and now it's finalizing, has finalized on the Senate. Is a sort of what I call a straight jacket. The spending cap is a straight jacket. The country has been, let's say, crazy enough and unable to by itself negotiate some sort of control itself with respect to the fiscal obesity. Now there's going to be a straitjacket. But of course, the straitjacket will only be feasible if it's followed by structural reforms addressing the rigidity of public spending. As some of you may know, that more than 75% of Brazilian public spending today is mandated constitutionally. So no matter who's in government, the public spending keeps creeping up. In fact, between 1994 and 2014, 92, sorry, in 2014, the public spending, the primary public spending grew an average at the real rate in absolute terms of 6% a year. Now think exponentially. How big was that? Which was now not a major fiscal problem because in the meantime GDP was growing 4%, 4.5%, and also the tax revenue system is very much based on taxing consumption and also aided by the boom of commodity price. The tax revenues in Brazil also grew at the rate of about 6%. So we had the rising share of GDP comprised by public spending. It went from 22% in 1992 to 34% in 2014. But the tax ratio also, the tax share of GDP also went up. But now this is gone. So the issue of the fiscal profligacy or fiscal obesity will be faced with the fiscal, with the spending cap, which has to be followed by reforms. And that's why pensions comes first in the list. Brazil has a very generous pension system for a substantial part of the Brazilian middle class. But this is also to be followed by public expenditure reviews on the education and health sides, and there we go. So much for the fiscal, and I'm moving now to how to tackle the issue of productivity increase. Of course, as we all know, this is to be, there must be a gradual improvement associated with higher quality of education. By the way, a substantial part of the poverty reduction in Brazil in the new millennium reflected to a large extent the simple improvement in schooling average, that is to say, even without major improvements in the quality of education. And so one may expect that if focus is given to improving the quality of education, that one might have even more positive effects in the future. But on a shorter time span, there are two obvious sources of productivity increase that have already been pointed out and taken as priorities for Temer's government, and hopefully to be followed by whatever comes after him, which are infrastructure. Brazil has a lot of waste and therefore a lot of productivity loss by simple absence of appropriate, adequate infrastructure. The World Bank, we estimate that Brazil, in order to keep the infrastructure just to maintain, to cover depreciation, it would have to invest roughly something around 3% of GDP in infrastructure. whereas the country has invested only 2.5% since 2000. So we've been eating the infrastructure. And there are so many stories that I could tell here about examples in which the lack of appropriate infrastructure is taking a toll on production. The classic case is the loss of soybeans production simply because of the absence of appropriate storage and transportation conditions. So that's why, aptly so, Dilma also had that, but she got it wrong at the beginning because her model was too much statist during her first 2 years. And when she moved to a more market-friendly approach in 2015, it was too late. But now, the previous lines of development of PPPs and of concessions and so on have been retaken. And so this is an area where the country can pursue higher investments. Obviously, as long as, and there are good reasons for strengthening independent regulatory agencies, strengthening of the division of labor between the private and public sector in each branch of infrastructure and so on. So I guess that's why Pablo is right in pinpointing the potential for infrastructure as a source of long-term investments in Brazil. The other area, and I'm running to the end, where one can find sources of immediate productivity increase is the improvement of the so-called Brazilian business environment. Some of you may know the work done by the bank, the doing business database, which is something that the bank has done for more than 12 years now, and which highlights times and costs of operating business. Nowadays, this year, the survey covered 190 countries, and the methodology has its own imperfections, but the fact is that it demonstrates clearly, in the case of Brazil, how there is a lot of loss in terms of talent wasted, in terms of material resources wasted by companies, implementing activities to cope with the business environment, activities that do not add value. And this was not subject of priority in the previous government, but I can tell you that this will later, little by little, show up in the headlines in Brazil. I've been working in the World Bank as well, the management with the Brazilian government in a whole agenda where we can find low-hanging fruits and some other areas where to economize on the cost of doing business in Brazil. And that will be an obvious source of productivity increase. I can tell you the country was very much close to reaching an agreement among states to simplify and harmonize value-added taxes, but then we had the fiscal crisis, but we can get back to that. There is also the possibility, there has already been some advance with a new civil code that shall facilitate cost of settlement of contracts in Brazil. There is also the reduction of red tape in foreign trade transactions, together with a review of effectiveness of the existing very high protection walls, tariff and non-tariff walls. And so this movement towards a more market-friendly business environment and less wasteful business environment is also an obvious direction through which the country can find source of productivity increase. So once we move on from the spending cap and the pension reform, which the government will present a proposal to Congress before the end of this year, then the word will be infrastructure, already announced, and improving the business environment. I hope this helped our conversation. Thank you.
Well, thanks a lot for that really comprehensive review. I want to just latch on to 2 points that you made with respect to improving the business environment in Brazil and launching infrastructure. Now, looking at it from a Canadian pension plan point of view, I'll just give you a brief description of the situation in which we generally find ourselves in. We're defined benefit pension plans. We've made promises several years ago that have to be honored soon. As the population ages, we find honoring that promise ever more difficult if we remain contained in advanced countries. And Canadian pension plans are generally a conservative bunch. Right? For us to consider investments in emerging markets, it takes a bit of time. But we're being pushed there by the pure economics of our plans, right? In the sense that, advanced countries nowadays, I guess if you grow 2%, you're doing well. Interest rates, despite the recent hike, following the elections, are still way below what we usually count on over the last 30 years, right? In terms of a 60-40 portfolio, and you'd have, a good share of your pension plan promises being met by holding bonds. That's not the world we live in, and if you live in Europe, then you're losing money by investing in your bonds with negative interest rates. So we have to think out of the box, right? And a big element of that thinking out of the box is, moving to emerging markets. OMERS, a few years ago, moved to a lot more private market investments away from public markets, and that was seen as a great transition. We're ready, I think, now to make another kind of transition, which is going beyond Europe, going beyond North America, and thinking about emerging markets more broadly. And so, what are the things that we look at when we want to invest in infrastructure or private equity? I'm not talking about public markets, because there we're like everyone else. We can dip in and out in the short run, and that's not what I'm talking about here. I'm talking about real money for a really long period of time to match our liability structure. We'll be looking at a lot of the things that both our panelists mentioned today. Okay, we're going to be looking for long-term growth prospects, and if you look at a country like Brazil, you have to say that it's got the key ingredients. Okay, and those ingredients are excellent demographics, at least compared to us, in case. Okay, and that demographic window will be there for the next 10 years at least in Brazil.
That's right.
Or more. You look at democracies. Democracies are important, right? Investing in China is one thing over 20 years. What's going to happen to your investment over 20 years? Are we sure of the political climate? Are we going to be able to get our money back? These are things that are important. Yes, there are crises, and Brazil is an obvious example of a political crisis, but it's not in one where you fear for the safety of your investment and whether or not you'll get it back. So democracy and now strengthened rule of law post this debacle is a good thing for us, for sure, in Brazil, right? Also that the huge potential, we think, at least in terms of Brazilians' basic human capital. Sure, there could be improvements, but education levels are still relatively high compared to other emerging markets, and that's a good thing. So these fundamentals for us are really solid for Brazil and lead us to think, yes, over the long run, we'd like to be involved in this country. But in the short run, or at least you could even say in the next few years, we are a bit deterred, I have to be honest with you, by the corruption scandals and things like this. Because if you want to invest in infrastructure, you're going to be dealing with the government for sure. Right? And as this corruption scandal widens and it's not over yet, and it involve who it is, it going to involve the CEO of the company that you're investing in or not? Because these things, they will cause us to pause for a while, for sure. Right? So it may be a turning point for Brazil, but it's not one that really long-term investors necessarily can seize upon right away. I think we'll be looking for things like whether or not that those fiscal reforms are actually passed. Okay, will the pension plan system be reformed? Brazil's been talking about that for ever since I started studying economics. All right? Will earmarking be reduced? Right? Brazil's fundamental problem is fiscal, right? It's when times are good, the government just loads up, and times are really good because fiscal policy is pro-cyclical. And when it's bad, then it's really bad, and you have a fiscal crisis. And if you look at the IMF's debt projections, Brazil could be back to like the pre-Lula days in a few years, where you're worried about debt sustainability, right? And it's possible. And that's why these rules that are now being implemented by Tamer are fundamentally important. So we'll be looking at them very closely and monitoring that. And it's with a bit of time and implementation, and does this really work? And then I think you can convince Canadian pension plans, many of which are already in Brazil, but convince them to increase their investments. We know the foundations are good, but we do need some sort of commitment to fiscal stability over the longer term for us to feel confident about, you know, putting billions or what have you in an infrastructure project or something like that. So that's a little bit my perspective.
Robert, you mentioned that, I don't know if you have 2 minutes, you know, perhaps both the three of us can just talk about the year ahead, or let's define year as 12 months, 18 months, 24 months, you know, because nowadays, in political terms, the year has more than 12 months lately, unless you're in the UK. It happens overnight, but they don't tell us when they will leave the European Union yet. Just 4 observations, and I have a bit of a year ahead. I think it's important. I work for a bank. The year ahead is always important, right? So, Otaviano, you mentioned the whole issue of fiscal obesity. I would like to talk about the concept of liquidity obesity and the liquidity obesity of the global financial system. And since the crash of the system, 2007, 8, 9, and the still of liquidity obesity is still here with us. And the Fed will raise rates, but more importantly, the market has already, tightened monetary policy. You know, if you are aware, you know, the 10-year U.S. Treasury bond yield went from 1.4 to 2.35 the last time I checked, a couple of minutes ago. So clearly, there is a situation interest rates are going upwards. Usually, interest rate upwards is not what the Fed does with the Fed funds rates, which, you know, with all due respect, this is Pablo talking on Scotiabank. Probably, you know, Lady Yelling must have been, or Chair Yelling, you know, or Yellen, you know, maybe have been influenced, you know, by the political cycle. She cannot say that because the central bank is usually independent from the government. But we all learned, at least on my brief 30 years of existence of monitoring emerging markets, that central banks are not independent of the cycle or the political cycle, and that's probably what happened. So clearly, interest rates, long overdue, going higher. Usually the highest indebted economies will suffer. The Philippines in Asia, you know, the Turkeys in Eastern Europe / Middle East, you know, the Brazils of the world, the Mexicos of the world. Mexico has deteriorated its debt situation, you know, over the last 10 years, you know, believe it or not. So clearly interest rates are going upwards, and it's not about what the Fed does, you know, in December 15, is what the market does, you know, over the next 12 months, and we'll see that happening. So that is fiscal obesity in Brazil, liquidity obesity in the world has to be corrected as well. What we now in the media call monetary policy normalization. Second concept, capital repatriation, is a fact. The US had a lot of money because they didn't have any returns, and you highlighted that. US and Canada, it's the same. A lot of money outside of the US jurisdictions in search of yield. And they created the perfect platform, you know, to make, you know, a sustainable profit in US dollar terms, what's called the Mexican bond market. You know, 60% of holdings of Mexican local currency bonds are foreign. That money will come back, will go back as interest rates in the US starts to repatriate. The repatriation effect has 2 components. One is cyclical, i.e. the Fed, and the other one is structural, i.e. Panama Papers. So, and then I can bring Brazil into the equation. Panama Papers is only just a symbolic, you know, just probably milestone of the change in global private banking that we have seen since 2008. So right now, it's not cool to have your money abroad in a Swiss bank account, in a Panama, or an offshore center in Cayman Islands. That money is coming back. And which are the countries, interesting enough, that have a lot of cash outside of their country? Brazil, Argentina, Mexico. You believe it or not, Venezuela, huge. So these countries do not need cash. What they do need is the long-term capital investment that, you know, companies in Canada may provide, pension funds in Canada may provide, because the market will provide them, you know, access to portfolio money. Argentina, example, still in default rating by all rating agencies. When they went to the market last March to issue $15 billion, in only 10-year bonds, there was demand for 70. And so rating agencies, had Argentina on default rating. The market could not care less. They were ready just to give Argentina 4 times what they needed. They ended up just issuing 10% more, 16.5. Third observation, we need to monitor the political transition of systemically relevant economies. China is important in 2017, in 2016. By the way, I don't know if you noticed, but over the last 20 months, the Chinese central bank lost $900 billion US dollar equivalent in reserves. From $4 trillion US dollars in central bank went to 3.1 today. Nobody talks about that because we were just sidetracked by issues about Brexit and the US vote. And meanwhile, the Chinese yuan was devaluing from 6 to 7, and the central bank was using $900 billion to defend the currency. China is a risk factor. So it's not only the source of our products here. So, and 2017 is a major important issue for that country. So we have to monitor that. And then elections. 2018, we're going to have 2 elections in Brazil, in October, and in July in Mexico, the most important, the largest economies in Latin America. So we could say that election risk will not be mitigated, from now on. Actually, we have just to be, and we learned in 2016 that we have to listen to the right pollsters. We need to watch the right TV channels, and we need just to question every single blog out there because everyone was wrong. Okay, so clearly we need just to be clear of the surprise factor. Final comment: the U.S. dollar is strengthening. Not strengthening against the Brazilian real, which crashed 60%, as I said before, is strengthening against all peer currencies, particularly the euro, particularly the pound sterling, particularly the yen. So again, we're going to be living over the next 12 to 24 months on a dollarized, economic environment. Dollarized means U.S. dollarized. Unfortunately, not for us. The Canadian dollar may be subject to some adjustments as well in the process. So I'll leave it there. So a year ahead. How do we put all this Brazil in context? I think Brazil is turned the corner. Structural shift takes time in Brazil. This is the time to monitor and go deep. Forget about the Lava Jato, that's the path. It's like the US vote on November 8th. Infrastructure, the privatization of banks in Brazil. 57% of the assets of the banking sector in Brazil are under state hands. That's not sustainable. That would not happen. It used to be 1/3, now it's 57. That's the legacy that needs to change. I'll leave it there.
Great.
Yeah. Can I step in?
Absolutely.
First of all, a disclaimer. Instead of using the expression Panama Papers, we like to use it Fonseca Kensington Papers. Among other reasons, because more than 75% of the transactions in the case happened in outside Panama's territory. And as you may guess, Panama is one of my countries, so we don't like it. Second point, as Pablo aptly said, and also Breard, markets are taking Trump seriously and literally, right? To use the jargon that became so famous. And that's why interest rates already, the Fed rates, the rates, market rates are already going high, and as well as the dollar appreciation. And I wish I had the chance to hear what was the Canadian view on the proposed infrastructure package by Trump. On reacting to some of all these scandals, to some extent, it surprised me that you say that the scandals are scaring investors, whereas I imagine the contrary wise. Now that you know that even a CEO of a big company, such a big company like Odebrecht, that was subject of article by The Economist not long ago, praising it as an example, a template of a company from emerging markets. Now that this guy has been in jail, and others as well, I would say that definitely the structure of incentives, of risk-weighted benefits and costs of of doing, bribery and so on has shifted in the country. I would imagine that now you can expect less of it because the risks have changed. There is no longer, let's say, you can't go, there's a price to be paid. Let me tell you, I was looked after by a guy here not long ago, and the guy came to tell me the following: look, I've been working with mutual funds for 30 years of my life, and in regulated sectors in the U.S. I buy bonds and equity of companies that cater to the regulated sectors in the U.S. And he said, I have never ever bought anything in Latin America. But now the news about your country have called my attention. Maybe there now I can find new agents, new schemes, new market structures where I can buy things. So to some extent, I feel like I may be very much up to being a Brazilian. But I see a parallel between what's happening in Brazil with the age of the robber barons here in the U.S., or maybe with a better outcome than what happened in Italy or happened in Japan. So I have been getting used to the idea that the scandals are exactly, have become a watershed in terms of an evolution towards more efficient market structures. On the fiscal, you were right to be seeing earmarking and indexing of revenues and expenditures have to be part of the package. And the difference between now and before, in all those years in which the country has spoken about pension reforms, is that now there is no alternative. With the spending cap, either there is a pension reform or there will be no space for everything else that matters. And now you will have an alignment of groups of interest associated with education and health and infrastructure to help, obtaining support for shrinking the pension bill. So I think that we have a reasonable ground to be optimistic with respect to finally having a significant pension reform in Brazil. And just to conclude, yes, we'll have a very sluggish recovery. I also agree with Pablo. I guess the range of forecasts have converged towards something close to 1% next year. This is due to the fact that you have still a debt hangover on the household side that is being digested only slowly. Some corporate as well have been dealing with the debt overhang of the boom period only gradually since 2013. Those of you who are accompanying more closely know how several Brazilian corporates have used the liquidity obesity to reprofile their debt, but they have, let's say, shunned away from more acute critical situations. But nonetheless, they remain uploaded with debt, and they're waiting yet to see what happens. So that's why the recovery will have to be sluggish. But if the fiscal reform, a credible one, is now in place, this will naturally be is already leading to better levels of confidence, and then it's a matter of time before the private sector starts bringing to the table their investment prospects. But again, I believe I think the expression of a regime change, both in economic and politics, is appropriate. We thought that we had got rid of populistic macroeconomic policies. For the sake of transparency, to disclose, I am a non-partisan economist, and I had never whatsoever affiliation with the PT or any party, but I was a part of a team that was called by a physician who was made Minister of Finance in Lula, in the beginning of Lula's government, because Lula didn't want the PT economists to take care of it. And so he put a physician, and the physician called people like Joaquim Levy to be the Treasury Secretary, called me to be the International Affairs Secretary, called Max Lisboa to be Secretary of Economic Policy, and Rashid, the Revenue, and so on. At that time, and we were part of this transition of Brazil is becoming like Chile in terms of a commitment to macroeconomic responsibility. But then it was lost, particularly after 2008, when among the unintended consequences of the global financial crisis, it was this perception, the radical AOs within the Brazilian coalition who said, see, look, these guys who preach for macroeconomic stability and so on, these neoliberals, they led the world economy to such a deep crisis. And then there was a shift towards old-style heterodox policies. But now, the burden has been so deep that the likelihood of anybody sitting at the chair of Brazilian economic policy making and adopting any sort of the heterodox policies that were implemented after the global financial crisis, I would dare to say they're close to zero. We are back to where we were after this malign adventure.
All right, well, thank you very much. On that note, I'd like to thank our panelists, and we'll call an end to